Hello everyone. Today we would be discussing about the Taxation Laws Second Amendment Bill 2016. I am Vivek Nahadia. I am a chartered accountant, company secretary, and currently I am pursuing LLB. You can contact me on 880 Finance Minister Arun Jaitley ji introduced the bill in Lok Sabha to amend the income tax law. It includes various proposals carried forward by Ministry of Finance on behalf of Union Cabinet. This I have discussed already in my earlier video why this bill has been introduced and to curb what this provisions of the Income Tax Act were amended. I have divided the provisions of the Taxation Laws Second Amendment Bill 2016 into two parts. I will be recording two separate videos of the same bill. Part 1 consists of the provisions related to Section 115 BBE, Section 271 AAC and Section 271 AAB. Whereas Part 2 will consist of provisions related to Pradhan Mantri Garib Kalyan Yojana 2016. In this video, I will be discussing about the part 1 and I will upload the part 2 soon. Section 115 BBE. This is an existing provision of the Income Tax Act, and Section 115 BBE is applicable in two cases. Case number 1, where the total income of an assessee includes any income, where the total income of the assessee includes any income referred to in sections 68, which talks about cash credits, section 69, unexplained investments, section 69A, unexplained money, section 69B, amount of investments not fully disclosed in books of accounts, section 69C, unexplained expenditure, or section 69D, amount borrowed or repaid on hundi. So the total income of the assessee includes section 68, 69, etc. These income is included in total income of the assessee. And this total income is reflected in the return of income furnished under section 139. Or this is one case. Now we'll talk about the second case, where the total income of an assessee determined by the assessing officer. In this second part, the assessing officer is determining the total income, where the total income of an assessee is determined by the assessing officer includes the total income determined by the AO. This total income includes any income referred to the above sections. The sections which I have referred just now, these sections 68, 69, 69A, 69B, 69C, 69D, the total income determined by the assessing officer includes this income, and if such income is not covered in clause A. So in 115 BBE basically talks about two aspects. Number 1 is the total income which the assessee determines, and that total income includes this section 68, 69, etc. income. And the second part is AO determines the total income, and this total income determined by AO includes this section 68, 69 income other than what is covered in the part 1. For both these cases, section 115 BBE is applicable. For example, just we can take, suppose the total income is 16 lakhs. Out of this, 5 lakhs is the income referred to in specified sections above, and the balance income is suppose 11 lakhs. So now we will talk about the tax rates for these two parts. The specified income, what would be the tax rate on specified income, which we have discussed earlier, and what would be the tax on the balance income. The income tax payable shall be the aggregate of 60% tax on section 68, 69, etc. income. In our example, as we have taken, 16 lakhs was the total income, 5 lakhs was the specified this section 68, 69 income, and the balance 11 lakhs was the 16 lakhs minus 5 lakhs is the balance 11 lakhs. So on these 5 lakhs, the amount of income tax calculated on the income referred to in clause A and clause B at the rate of 60%. This is an amendment. This is very important. On the balance income, we will read here. The amount of income tax with which the assessee would have been chargeable had his total income been reduced by the amount of income referred to in clause 1. So 16 lakhs is the total income reduced by 5 lakhs specified income. The balance is 11 lakhs. For this 11 lakhs, regular tax rate would apply. Regular tax rate. Now we will discuss about section 271 AAC. This is nothing but in section 115 BBE we were talking about the tax rate. In section 271 AAC we will be talking about the penalty. Penalty for section 115 BBE. The assessing officer may, notwithstanding anything contained in this act other than the provisions of section 271 AAB, direct that in a case where the income determined includes any income referred to in section 68, 69, 69A, 69B, 69C and 69D. For any previous year, the assessee shall pay by way of penalty in addition to tax payable under section 115 BBE. Suppose total income in our example was 16 lakhs. Out of 16 lakhs, 5 lakhs was the income referred to in this section, 6 sections. On this 5 lakhs, penalty would be applicable in addition to tax rate of 60%. What would be the penalty? 10% penalty on tax of section 115 BBE. A sum computed at the rate of 10% of the tax payable. This is very important. The penalty of 10% is on tax payable under clause 1 of section 1 of section 115 BBE. In our example, 16 lakhs was the total income, 5 lakhs was the income referred to in those 6 specific sections. On this 5 lakhs, 60% tax would be applicable and penalty would be applicable. On this tax amount, penalty of 10% would be levied. So 60% of 5 lakhs comes to rupees 3 lakhs. Penalty 10% is on 3 lakhs and not 5 lakhs. Be careful here. Penalty of 10% is on the tax amount. So 10% of 3 lakhs comes to 30,000 and the total comes to 3 lakhs 30,000. 271 AAC talks about two cases where the penalty cannot be levied. The first case is provided that, this is a proviso, provided that no penalty shall be levied in respect of income referred to in section 68, 69, those 6 sections, to the extent such income has been included by the assessee in the return of income furnished under section 139 and the tax in accordance with the provisions of clause 1 of subsection 1 of section 115 BBE has been paid on or before the end of the relevant previous year. Be very careful with this. So, when is penalty not levied? Penalty won't be levied under section 271 AAC if, number 1, if tax is paid on or before the end of the relevant previous year. In the current scenario, the previous year is 1st April 2016 to 31st March 2017. By at least 31st March 2017 on or before 31st March 2017, tax should be paid. This is the first point. And the second point is that the assessee should file the return of income under section 139. If these two conditions are fulfilled, then the penalty under section 271 AAC at the rate of 10% of the tax won't be levied. Now we will discuss about the second scenario. The second scenario is that when the penalty under section 271 AAC, that is 10% of the tax, is levied, then the penalty under section 270A cannot be levied. No penalty under the provisions of section 270A shall be imposed upon the assessee in respect of the income referred to in subsection 1. So if this penalty under section 271 AAC, which is 10% of the tax amount, is levied, then the penalty under section 270A cannot be levied. I have discussed the provisions of section 270A in my earlier videos. Penalty provisions. The provisions of section 274 and 275 shall, as far as may be, apply in relation to the penalty referred to in this section. The normal penalty provisions would be applicable. What would be the surcharge under section 115 BBE? The advance tax computed shall be increased by a surcharge calculated at the rate of 25% of such advance tax. Thus, under section 115 BBE, tax is equal to 60% of income referred to in section 115 BBE. Surcharge is equal to 25% of advance tax, and penalty is equal to 10% of tax payable under section 115 BBE. We'll discuss about section 271 AAB. This section talks about penalty in case of search. We talk about income tax raid, search cases. The assessing officer may, notwithstanding anything contained in any other provisions of this act, direct that in a case where search has been initiated under section 132 on or after the date on which the Taxation Laws Second Amendment Bill 2016 receives the assent of the President, the assessee shall pay by way of penalty in addition to tax, if any, payable by him. What is the crux of this slide? From the date of the assent of the bill by the President to, suppose search under section 132 is conducted before the date of assent, what would be the scenario? If the search is conducted after the date of assent, what would be the scenario? First of all, section 271 AA-B, which talks about penalty in case of search, is an existing provision which is being amended in this bill. What is the amendment? I'll explain in detail. Let us first study the latest or the current amendment. Penalty is equal to 30% of undisclosed income. A sum computed at the rate of 30% of the undisclosed income of the specified previous year if the assessee in the course of search in a statement under subsection 4 of section 132, in the statement under section 132(4), admits the undisclosed income and specifies the manner in which such income has been derived. Specifies manner. Number 4, substantiates the manner in which the undisclosed income was derived. Substantiates manner. And on or before the specified date pays tax together with interest, if any, in respect of the undisclosed income, and furnishes the return of income. Number 5, pays tax, furnishes return of income, declaring such undisclosed income therein. Declaring such undisclosed income. If these 6 points are fulfilled, that is, search is conducted, and during the course of search, under the statement under section 132(4), assessee admits the undisclosed income, he specifies the manner, he substantiates the manner, he pays tax, and he files return of income disclosing this undisclosed income, then the penalty would be 30% of the undisclosed income. This is the point number 1 of section 271 AA-B. Now let us discuss about the point number 2 of section 271 AA-B. Penalty is equal to 60% of undisclosed income. A sum computed at the rate of 60% of the undisclosed income of the specified previous year if it is not covered under the provisions of clause A. For any case other than the clause A, penalty would be 60% of the undisclosed income. The penalty under section 271 AA-C, which is 10% of the tax amount, whereas the penalty under section 271 AA-B is not on the tax amount, it's on the undisclosed income amount. Disclaimer, I have just shared my views on the above subject and I do not intend to provide any advice. Please consult your chartered accountant before implementing the above information. These are my contact details, and this presentation can be downloaded by clicking on the link available in the description. Please like the video if you find it useful, and do subscribe for my channel to get notifications when I upload the second part of the amendment bill. Hope you like it. Thank you so much.